Good morning. It's Sunday, August 6th. What we see here is from FinViz. It's for those of you who do not trade futures and are looking for longer-term charting tools that Stock Charts does not provide net of fee. This is a good place to go and get your monthly charts for about any commodity. This is gold. We see from 1995 to present the monthly chart. What we do not see here, and what is really interesting is, in my opinion, gold's been in a bull market since 1968, from a price of 34.50 to a high of 1920. Some would suggest 1913, but we'll use 1920. Effectively, what that leads us to in terms of the numbers, and hopefully those of you who read the prior two articles suggesting you learn to use Fibonacci retracements. We see this cluster from which we launched a tremendous leg up after the 2007 to 2009 financial crisis. The metals actually tanked first ahead of the broader indices, bottomed out in late 08, beginning the end of the third quarter, and this is a very important area right here. We'll talk more about that in just a second. Blew off to a high and have ever since been in a defined downtrend channel that we broke in December of 2015, moved up, moved back down, and have been in consolidation mode. You'll notice that this consolidation here is lower than this consolidation here. Some would consider this an inverted head and shoulders. I frankly do not. Those suggesting such suggest this is a higher high on that shoulder, inverted, but there's some issues with that. We do see a lower high here and a higher low. But again, this is obfuscation in my opinion. So let's go back to what we call the halfway back, or 50% level. The halfway back is at 977.50 from June of 1968 at 34.50 to a high of 1920. The math was very simple. We divided it in half. I think we arrived at 1880 something and ended up with 940 something and added 34.50 to it and came to 977.50. 977.50 is well below. This is well below that cluster. But if you look, it was the launch pad, right? It was the launch pad, the halfway back. We dipped in, right? Significantly, we dipped in. But then took off. So what am I looking for? Well, I'm looking for something very similar to this to form the bottoming process. A lot of metals advisors, newsletter writers, and gurus are suggesting this is a bottoming process. Could be. Probability says potentially no. The reason why? The 618 retracement, right, from the low to the high sits at $1,200. Just over $1,200, right? So we have traded below it once, come up above it to 1377.50, dipped back in 2 months, boom, up again, right? You can see the commitment of traders down here. I don't know if you all check that, but you should. We've suggested that a number of times. So there's your monthly. We've got an important halfway back, a 618 that's failed once, twice on the monthly, although we have higher low, right? Simple. Weekly, fundamentally shows a few things. Gap, right? Ever present. And this is our period of consolidation. All right, so very steep downtrend channel. Jumped out of the channel, lessened the slope, jumped up and out. Duration in terms of time was very short. Fell back out of bed, and now we're in a sideways consolidation. Looking at the weekly, one could argue that this sloppiness down here, where we did not quite reach the halfway back, but traded at the 618, fell below, came back up, and are trading above the 618 now, is bullish. Cranked in, this is the front month for GC gold contract. We can see a high, to low drawn. And we can see the halfway back, right, is really providing an area of consolidation. Resistance, I don't know that I would call that support, frankly, but in any event. So, drawn high to low or low to high, this would be our 618. We've pierced it twice, which would suggest something bullish had this actually closed above this on a monthly basis. The same applies here. Boom, fail. Now we're kind of stair-stepping our way sideways with whipsaws that we've seen arrive after hours, particularly Pacific Coast time around 7 o'clock, a little after, 7:09 to 7:14. We've seen the algos take control and try and clear the DAX first up, then down. So they'll run the stops and then on the short side and then panic the buyers out. So there's been a little bit of a shakeout going on. This continued into Friday. So let's go ahead, and I'm going to be showing you the October mini. That's something I use as a reverse hedge, and that's what we're going to see here quickly. Talk about silver in a little bit. The daily looks like this, within this range, and why I think we're nearing exhaustion on this move. Again, I could be wrong, but this is what I see. Drawn high to low, and what are we doing? Well, we're trading the boundary. We failed to cross back up and over and hold on a daily basis. We've broken down. We can see our MAs are crossing, volume dropping off, RSI weakening. MACD, I don't really put a whole lot of faith in. You know, it is a tremendously lagging indicator, but it can provide some clues if you know how to read it. We wanted to look for a flattening top here and then a precipitous decline on the cross. We don't have the cross yet, so there's more ugly ahead. But if you'll notice this area right here, this is an important area. By volume, there are a bunch of contracts stacked here. This would be the final line in the sand, the 1231 area, that would probably drive most of those new entries on the most recent COT report out and force a retest of this low, which I believe will break. Here is the 4-hour chart, which shows a cross, MACD dipping under, RSI looking pretty ugly. This volume spike, well, here's the whipsaws intraday. Boom, 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 shake and bake. And typically what happens on these is we'll come halfway back to this candle. So if we look a little closer in, we're going to see what that looks like. That is our micro measured move. So here's that move. 1272.25 cluster of about 5 hours. Economic data released. Employment data. Boom, out go the lights. And then we open up the 10 o'clock hour where the pros come in. Boom. And we spend the rest of the day kind of twaddling back to trying to hit our 12 EMA. Clearly broke under. We're spreading here. So our retrace targets for short entry, for those of you who missed this entry, would be the halfway back at 1264.50. You could see 1266.25 or a little lower, somewhere in between the 12 and 26 would be pretty solid entry. You'll want to watch things pretty tightly here, how they progress, but I would not chase this. There was some shorting activity or hedging activity going on in this area, which provided the boom up and at 'em. And so shorts are in stasis right now. Moving on to silver. This is just a clusterfuck. Forget it. It's done. It's going to go back and retest this. It's broken down by the numbers. It's completely gone. It's dipped in once, lower low twice. We had our whipsaw. We came up, couldn't retrace to the halfway back. It's just done. Couldn't get to the 1710, 1730 area, which was really what I was kind of hoping for to get entry. That could arrive, but I think we're done. No matter how you look at it, even if it does retrace back up here, silver is going back to pet rock status here. I believe we can blow through that, hit 12, and potentially the mid to low 9s would be the extension by the numbers from there. How ugly can it get? Well, it can get a lot uglier than that. Yeah, pretty depressing actually. I own a fair amount of silver. I think it's going to be worth holding, and I think there will be immense difficulty in even acquiring it within the next 2 to 3 years, perhaps shorter. So you have to watch dealer spreads. Silver Doctors, JM Bullion, and all the rest of their ilk, I don't buy from. I can't respect their fear-mongering. I do occasionally buy from Avmex, but try and broker as much as I can locally. Seems to work out pretty well. But this is a hold your nose event. I don't think you sell your silver. I think you hedge it. Again, it's worth holding. Gold, well, let's go back and just take a look at that monthly. So we're, roughly 1258, 1256 on the spot market. You're going back here, in my opinion, 977.50. So why not go ahead and hedge that decline? I don't think selling is prudent. I think you hold your physical, hold your nose, and let this shake out, but hedge it. So timing the hedging really takes us back to this. Short entry is anywhere from 1266 to 1262.50 to perhaps even 1260.25. This may just go ahead and blow downward Sunday night tonight. We'll have to wait and see. In any event, that's where it all stands. Everyone have a great one. Thank you so much.